Peter, hi. First one up on the US Fed meeting itself and the kind of jitteriness that the markets are looking at. What are you expecting?
Well, good afternoon, Manisha. I think we're expecting blast off in March. I think that's the general consensus. The mood is very much that the deal's been done. So I think that's general consensus from analysts and every commentator. So I think that I'm going along with that. We've got a large amount of data coming out this week. It really is a swathe of data. So it'll be an interesting week, and I'm expecting a bit of volatility also. We've seen a big sell-off in equities, and it'll be an interesting week how it moves forward.
Peter, in this sell-off, do you think there are buying opportunities here? Because the fundamentals haven't changed. We still are looking at lower inventories. The energy transition as a theme is still on. Would you say it's a good time to start going long then?
Well, I think it's a good time for some markets to be long. And as you mentioned, as far as the Ukraine-Russia situation and the uncertainty with geopolitics there and a premium being built into, I think, energy prices and certainly some of those metals. So that's probably a time to look for further upside. Where also, if you're looking at, I think the general feel as far as equities, it's probably just taking a bit of a breather, and it's a sell-off, and it's, I think, taken everyone by a little bit of surprise. As far as currency is concerned, that US dollar index is fairly choppy, Manisha, at about 95.6. So that's US dollar index. So there's going to be interest there whether all the banks move in tandem, Bank of Canada, then you've got the Aussies, Kiwis, and of course the Fed. Do they all go, gung-ho and start to raise rates pretty much over the next matter of weeks or early, couple of months?
Clearly. So, Peter, if you had to start picking up on metals, which one would that be? Where do you think the fundamentals are stronger? And since you read so many charts, the history says that once the US Fed starts to increase interest rates, it actually supports metals. I mean, we've seen metals start buying into when the rate hike starts.
Well, exactly right. The uncertainty this time around is, of course, the Russia situation and how quickly that could escalate. So that premium, if you're a trader, you've got to be looking at that, Manisha, for short-term gains because of geopolitical tensions and a quick risk premium strapped onto it that could move at 10 or 15% very, very quickly because of the huge markets that they play in, the things, as you mentioned, as far as nickel and certainly some of those other base metals. So that they're one to keep an eye on. And I think that the crude market could continue to have a little bit further uptick also, because when you're looking at it now, I mean, I'm looking at 88.30 for Brent. NYMEX is just under 86 or 85.5. So it's choppy, it's volatile, and again, offering great opportunity for a trader.
Clearly, so even as the metals are down, it is the crude prices or the energy which continues to range up, and that perhaps is a buying opportunity there.